Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2025, May-June, Paper 2-1 and Paper 2-3, question number 2. This is Paper 2, which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit for the paper is 1 hour and 45 minutes. Since question number 2 is of 15 marks, ideally you should be spending about 17 and a half minutes in order to solve this question. And in this video as well, we'll be attempting to solve this question number 2 under 17 and a half minutes. So without any further delay, let's get started. Ben and George converted their partnership into a limited company, M Limited. We need to explain 2 benefits of treating as a limited company rather than as a partnership. The very first benefit is that within a limited company, they will now become shareholders, and shareholders will have benefit of limited liability for the debts of the company. It means that they do not need to use their personal assets in order to fund the debts of the limited company, unlike what they had to do while acting as partners for the partnership business. Within partnership, they will have unlimited liability. Let's write it down. Shareholders have benefit of limited liability for the debts of the company, which means their personal assets are not at risk. Okay, that is the first benefit. The second benefit is that limited company will have a separate legal identity. And as a result, they can sue and can be sued by other companies in its own name. But as for partnership, the partnership business did not have a separate legal identity. And if someone, let's say a customer, had to sue the partnership, then they would have to sue the partners, Ben and George. So that is also a benefit. Let's write it down. Limited company has separate legal identity, so can sue and be sued in its own name without having to involve the name of the shareholders in case of the limited company. That's all for the first part. Let's move towards the next one. We have some additional information. The following information was extracted from the books of M Limited at 31st December 2024. Okay, we have the opening balances as well as the closing balances. We only have the closing balance for our share capital. For share premium, we have both of it. For retained earnings as well, we only have the closing balance. We have general reserve, 8% debenture, 10% bank loan, and taxation charge. Okay. On 31st March 2024, the directors had paid an interim dividend of 0.05 per share on all ordinary shares held at this date. Okay, our closing date is 31st December 2024. And for this interim dividend, we only need the shares which were issued at this date. So we need to take a look at the additional information as well. On 30 June 2024, the directors had issued 200,000 ordinary shares at a premium of 0.40 per share. On 1st October 2024, the bank loan was taken out by M Limited. For the year ended 31st December 2024, the profit for the year was 285,000. Okay, so there was only one share issued during the year, which was this 200,000 ordinary shares. Let's see. The par value is 2. So within share capital, this will result in 200,000 times 2, which is 400,000. This is to be included within ordinary share. Then for share premium, we need to include the premium of 0.40 as well. So that's the number of shares, 200,000 times 0.40, which results in the value of 80,000. So 80,000 should be included in our share premium. Okay. So out of this 1,600,000, 400,000 belongs to the new share issued. So 1,600,000 minus 400,000 will result in 1,200,000. This will be the opening balance, which is the balance at the beginning of the year. Then during the year, we issued share resulting in the value of 400,000. And by the end of the year, we now have the value of 1,600,000. So the number of shares at the opening date, and I'm calculating the number of shares so that we will be able to calculate the interim dividend. So the number of shares will just be the value at that date. At the date of 31st March 2024, there was no issue of shares because this is only done at the date of 30 June 2024. So we only need to include the opening balance of the ordinary shares. So that will be 1,200,000. Then we just need to divide it by the par value, which is 2. This results in 600,000. So we had 600,000 ordinary shares. Okay, let's take a look at our question. We need to calculate the amount received from the issue of shares on 30 June 2024. We need the total amount. We've already calculated that 400,000 will go towards ordinary share and 80,000 will go towards share premium. So that will be 400,000 plus 80,000, which results in 480,000. Then we need to calculate the total of the interim dividend paid on 31st March 2024. Okay. So we are paying dividend of 0.05 per share and we have a total of 600,000 ordinary shares at the date of issue. So that is 31st March 2024. Let's write it down. So 600,000 number of shares, we multiply it by the rate per share, which is 0.05. This results in the value of 30,000. Okay, now we need to calculate the profit from operations. We have been given the profit for the year right here. Remember the format for statement of profit or loss. We first have profit from operations, after which we subtract the finance cost and then get the profit for the year. So we just need to figure out finance cost first in order to calculate our profit from operations. Finance cost will just be our interest on non-current liabilities. Right here, we can see 8% debenture, which is to be repaid in the year 2029. And we can see that the amount existed at the opening date as well, and the amount is same at the closing date as well, which means that we used this debenture of 120,000 for the entire year in the year 2024. And the rate of interest is 8%. So let's calculate the finance cost. For debenture, we have the amount of 120,000 and the rate is 8%. Then we also have the bank loan. For the bank loan, we were told that on 1st October 2024, the bank loan was taken out by M Limited. So in the year 2024, we only used this bank loan for the months of October, November and December. So we only need to charge interest on these 3 months. Let's see. The amount of the bank loan is 50,000 and the rate of interest is 10%. So that will just be plus 50,000 times 10%. We only need it for 3 out of the 12 months. Okay, so the interest on debenture will be 9,600 and the interest on bank loan will be 1,250. This results in the value of 10,850. Okay, now we can just create an equation. This one. But I think in this case, we are also given the taxation charge. So the taxation charge for the current year, we need to take a look at the closing balance, which is 22,000. So now this equation will look something like this. Profit from operation minus finance cost minus tax will be equal to profit for the year. Okay. So our profit from operations, we first need to subtract the finance cost of 10,850. Then we need to subtract the taxation charge of 22,000. And this should be equal to the profit for the year, which is given to be 285,000. Okay, so now profit from operations should be equal to 285,000 plus 10,850 plus 22,000. This results in the value of 317,850. That is all for this part. Let's move towards the next one. We need to prepare the retained earnings account for the year ended 31st December 2024. Okay, for retained earnings, we do not have the opening balance, but retained earnings is part of our equity and equity is capital. So the opening balance will always be on the credit side. So that will be our balancing figure. So we have balance BT. This will be at the opening date, so 2024, 1st January. Okay, then at the date of 31st March 2024, we paid the interim dividend, and dividend paid will reduce our retained earnings. We've already calculated the value of the dividend paid, which is 30,000. So this will appear on the debit side because any reduction will appear on the debit side and any increment will appear on the credit side. So we have 30,000, and this will be paid out of bank. So we can just write bank, or you can also write the heading as interim dividend. This is at the date of 2024, 31st March. Okay. Then we had the issue of ordinary shares that did not have any impact on our retained earnings. Bank loan will also not have any impact. Profit for the year, we have to add it to our retained earnings. So this value will increase our retained earnings. This will appear on the credit side. This will be under the heading of statement of profit or loss. We have 285,000, and this will always be at the closing date. So this will be 31st December. Then I think we have one more item because we have been given the general reserve, and we can see that it did not exist at the opening date. So we must have made a transfer of 50,000 during the current year. So we transferred 50,000 from retained earnings, which means that the retained earnings balance will now be reduced by 50,000. So that will have to appear on the debit side. So that's 50,000 for general reserve. And since we do not have the exact date, we can just write our closing date. Then we can include the closing balance as well. And closing balance was given clearly right here. That's 243,000. Okay. Now we can figure out the total from the debit side and then calculate our opening balance. So that's 30,000 plus 50,000 plus 243,000, which results in 323,000. Now the opening balance will be 323,000 minus 285,000, which results in 38,000. Then we also need to show the closing balance as the opening balance for next year. So that will be 2025, 1st January, balance BD, with the same value, 243,000. Alright, that is all for this part as well as the entire question. If you found this video useful, make sure that you like the video and leave a comment below. And make sure that you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.